The schizophrenia of the RMB. China has become a global currency flood zone. Economic globalization directed by Western countries opening up the Pandora's box fully released the huge excess capital accumulated in its 300-year market economy process, bringing about global currency flooding. Excess capital is difficult to change its profit-driven nature. When the expected return on investment of the China concept is higher than overseas, various types of capital find it difficult to resist the temptation and come uninvited, treating China as a flood zone. The huge gap between the amount of currency released by 30 years of market-oriented reform in China and the surplus currency accumulated by the West for 300 years has become an unbearable burden for the Chinese economy. In the current situation, allowing funds to go global is undoubtedly a false proposition that goes against the nature of capital. It is not difficult to understand why Blackstone took the funds of a foreign exchange investment company and shot an olive branch at Blue Star, the largest chemical new material manufacturer in China. It is also not difficult to understand why only 26% of the total subscription amount for QDII in the banking sector was used in the first half of the year. On the surface, foreign investment is rushing in with the slogan of RMB appreciation, but its intoxicating meaning is straightforward, coming towards the depression. On the one hand, the enormous institutional energy accumulated by market-oriented reforms is entering a period of concentrated release, which reserves sufficient arbitrage space for capital. On the other hand, marketization has dismantled the planned system and administrative monopoly barriers in the asset field, allowing the prices of assets lying on the ground to be speculated through market transactions. It is estimated that the vast majority of the $120 billion inflow of hot money in the first half of the year has flowed into the asset sector. A frenzy of foreign investment has directly led to a surge in housing prices and stock prices. The internal and external currency values of the Chinese yuan are beginning to experience schizophrenia. The value of the foreign currency has entered the appreciation channel. The exchange rate of the Chinese yuan against the US dollar is increasing, while the value of the domestic currency is depreciating significantly. For example, for the same 300,000 RMB, yesterday you might still be able to buy a 100 square meter house or 15,000 stocks, but today you may only be able to buy a 20 square meter living room or 20,000 stocks, or even less. The rapid inflation in the asset sector has led to the RMB becoming increasingly worthless money. The split of the RMB is also reflected in the misplacement of valuation in the general commodity and financial sectors. In the industrial economy, in the general commodity sector, under the economic background, the combination of multiple factors such as the take-off period and the mid-term of the heavy chemical industry has greatly improved the production efficiency of the manufacturing industry, resulting in China's economic growth rate and corporate profit growth rate being 2.5 to 3 times and 3 to 4 times respectively, compared to the United States in the past decade. Therefore, the RMB is undervalued. In the financial field dominated by financial civilization, the renminbi is clearly overvalued as the total market value skyrocketed. The vanity of listed banks also reached its peak at the moment when the total market value of ICBC exceeded that of Citigroup. However, a set of data is enough to reveal the truth of its embroidered pillow. Citigroup's earnings per share and net assets per share in 2006 were 182 and 150 times that of ICBC, respectively, while the PE ratio was twice that of ICBC. HSBC's earnings before taxes and employee efficiency in 2005 were 4.26 times and 5.4 times higher than those of ICBC respectively, but its total market value was lower than that of ICBC. The domestic financial industry has low efficiency but high valuations. In addition, China exported a large amount of dollars to why about 10% of the U.S. Treasury bonds to support the U.S. capital surplus, which led to the overvaluation of the RMB. At present, the management obviously cannot consider whether the RMB is misaligned, and how to fight floods has made it extremely busy. Rotten forehead. For now, the 1.55 trillion special treasury bond seems to be a magic wand for deep freezing of liquidity. But there are two falsifiable points. Firstly, the premise of the value depression remains unchanged, and the motivation for foreign investment inflows still exists. Based on the current US dollar inflow rate of $25 billion per month, the frozen liquidity of 1.55 trillion yuan in bond issuance will be offset in less than 8 months. The second is that the liquidity recovered from the bond issuance is said to be entrusted to foreigners for management. But Blackstone's rebound has proven that this path is impassable. Furthermore, as the world's most open economy, China's system imbalance is a normal feature under an open background, and relative equilibrium can only be achieved through the exchange of material and energy with the outside world. Attempting to freeze liquidity to seek self-balance is too wishful thinking. This means that relative equilibrium may be achieved through walking on two legs: a small appreciation of the renminbi towards the outside world and a significant depreciation towards the inside world. By correcting the distorted currency value to compress speculative space. At the same time, we should give up the futile freezing of liquidity and find suitable flood discharge areas for it. In this way, the situation of flood fighting maybe another village will emerge. So, Ray is the flood control area. The first boundary of the Hong Kong district is the securities market. On the one hand, directing liquidity towards the stock market is currently the most intuitive way to flood. The quick-acting medicine can isolate inflation from the real economy, narrow currency gap in the real field, alleviate the pressure on the economic operation barrier, and self-digest through the ups and downs of the stock market. On the other hand, the capital market can take the opportunity to expand and strengthen from the surface, increase market chaos, vigorously develop the virtual economy, catch the embroidery ball thrown by financial civilization, and enjoy the benefits of financial civilization landing. The second level of flood control areas is the doubling of national income, which is the fundamental solution. In the first half of the year, the national tax revenue increased by 29% year-on-year, which is more than twice the growth rate of residents' income. In addition, the anti-encirclement and suppression of private capital, including the sentencing of online female bosses and the illegal housing reform. In the long run, the embarrassment of the country is strong, but the people are not rich is inevitable. Objectively speaking, excess liquidity is just a major opportunity to reverse this awkward situation, which is reflected in the monetary aspect, increasing national income and significantly reducing the cost of public income. For example, The wages of domestic enterprises, like foreign enterprises, are also included in the cost or tax and reduced in disguised form. In terms of assets, we will follow the trend to increase the capital market and adopt the policy of supporting the bottom and raising the level of the real estate market, increase the construction of HLM, open up the high-end market, etc. In his way, it not only achieves the goal of preventing the flow of fertilizer and water to outsiders' fields, but also improves the harmony index. At present, there are roughly 3 possible consequences of self-flood discharge: inadequate response to the unexpected financial situation. Moreover, under the deceit of experts and scholars from all walks of life, they panicked and became allergic, causing prices to skyrocket and overall hyperinflation in China due to the enormous pressure of large-scale flood discharge, leading to a repeat of the mistakes of price barriers, as in the 1980s in the fierce confrontation and adjustment process between policies and the market. We gradually realized the way of borrowing chicken to lay eggs and began to channel liquidity. However, due to the frequent occurrence of fear of heights in our hearts, there may be repeated and hesitant policies, making self-flood control roughly like walking on a tightrope, swaying left and right, bumping forward, and ultimately completing the thrilling leap. The relevant departments are well aware and deeply aware that excess liquidity is a good opportunity bestowed by history, which can be encountered but cannot be sought. Therefore they have a high vision and fully utilize self-flooding to upgrade versions, making the stock market take a larger position, promoting harmonious people's livelihoods, and enhancing the competitiveness of the system. This is the ideal realm for self-flood discharge. Given the consistent style of management and the complexity of the current situation, the probability of the second consequence is higher than the other two. So whose feast will this flood discharge be? Capital skilled in speculative drilling is undoubtedly the highlight of this feast been. At the same time, it is not ruled out that interest groups may play tricks during flood discharge to seek more personal gain. As for the future of vulnerable groups in low-lying areas, it appears even more uncertain due to flood discharge. In the 30-year process of market-oriented reform, people's livelihoods seem to have been relatively forgotten. If the policies remain unreliable during this flood discharge, it seems difficult for the people's livelihood sector to buy in, and may even become the trigger for the concentrated outbreak of social problems. Therefore, how to support the bottom may be a major policy note in the flood discharge process. At present, measures such as ensuring the minimum wage are just a drop in the bucket. Objectively, only by implementing corresponding compensation mechanisms for vulnerable groups and enabling them to live with care and dignity is the long-term solution.